It's been a rainy few weeks. It's been a very active rainy season, very active hurricane season as well. So, how would you say the weather has actually impacted business and the economy? What opportunities do you see for us there?
Yes. Well, interestingly, every adverse condition create new opportunity, as did COVID, right? IT and healthcare. But here with this, it really had a negative impact on quite a few companies. And it's interesting that companies are now speaking about how things like this impact them. We heard from lastly, which apart from the rains, they had some international logistics issue, and the resultant increase in cost in some of their inputs. We heard from Seprod, we heard from Wasinko, who spoke directly about the impact of the consistent rain. Since probably about June, we have been having these rains consistently, and how it has impacted sales. I look deeply at some of these articles to say what particular about the weather could have impacted them. And what we found is that, one, their cost structure would have increased because there might have been some damage somewhere along the way. Cost in terms of plant, equipment, property, cost in terms of downtime for the rain and starting up facilities, cost, sorry, in terms of logistics, getting goods. And this is a good cost, logistics, getting goods to the marketplace. So that is one aspect of it. On the revenue side, though, their ability to get inputs to keep production up, to produce goods, but also it would have impacted their consumers, their clientele, consumers who buy their goods and services. I would assume that, well, it is the case that quite a number of people, especially in certain parishes right after burial, imagine their incomes would now be directed towards recovering from burial, not towards consuming a particular type of good. I mean, there are some companies that might have done well out of that. For example, companies that, industries that sell material for house, plumbing, maybe electrical, etc. Those would have done well. But quite a few, like the Seprod, the Wisinko that sell food stuff, especially processed food, the last day and thing, would have been impacted temporarily in some areas. It did overall, based on the numbers we have seen. The post-recovery, though, based on some writings from Wisinko, was quite good, because apparently food picked up and non-perishable type food picked up. So tin, packaged, processed goods did pick up. So there would have been some recovery in demand, but not sufficient enough in order to have not impacted their financial statements.
Interesting. Very, these are things that I typically wouldn't have thought about that actually impact a company's performance, especially when it comes to the logistics part, Clive. But don't companies tend to outsource logistics? Like how heavy an impact is it really?
Well, some companies outsource. I'm not sure what the numbers are, in terms of areas or resources, in terms of trucks, etc. But nonetheless, just reaching these goods. There's also mentioned by, I think it was Wisinko. They said that the ability to hold in certain regions, the southern region that were impacted by burial, many shops, businesses simply could not hold their goods. So demand just simply fell off in those areas for a simple reason like that. They didn't have the electricity. Storage was gone. So that would have impacted them significantly. The ability of trucks to traverse broken light posts or crossroad, damaged roads, that would have impacted them also. So I can see, reading the article, watching the news, seeing the type of damage, how easily a company, any productive commercial entity can be impacted, could have been impacted. So whether the outsource or not, we can see the type of impact it would have had, at least for a while.
They say in every crisis there is an opportunity. Do you see any opportunity here?
Yes. In fact, a lot of opportunities. One, I think companies are more resilient now. Balance sheets where you can see the company's assets and its liabilities, but with to the assets, they have been largely improved over the last several years, even in an increasing interest rate environment. We noticed that over the last several years, quite a few companies were still raising capital, debt capital, more expensive capital, but there's a level of optimism that they were still raising capital and building out facility. We speak to Wisynco as one of them. We saw the quick recovery of some companies from certain type of disaster, like Wisynco. So companies are more resilient now. We look at the macro economy, the macro side. We see the dollar, the monetary authorities are very careful about managing the devaluation of the dollar because we want to contain inflation. We've seen the reduction in inflation rate, which means that there's a level of optimism or perhaps potentially greater spending power, right? Not just to buy goods to drive revenue, but also to buy stocks, because this is important, right? Disposable income or investable income after, various needs are taken care of in the household. We look at the reduction in the policy rate recently, which can impact the cost of capital. So all these augurs well for the companies. And I think these are mitigating factors, positive mitigating factors against the negative of a hurricane and the effects of a hurricane. So all those are happening. So I think there's a broad level of optimism. In terms of stock prices, we've seen prices ebb and flow. Some of it is right within the natural, normal cycle of price movements, the cyclical price movements, but quite a few of it we see where it could have been or may have been impacted by what we spoke to. The constraint on revenue and the increase in costs of several of these companies. So prices are ebbed and flow. Prices are still fairly cheap when compared to several years back, but we saw the ebb and flow of prices. So there are and still is opportunity to really get into the market to buy stocks. Quite a few companies are quite cheap still. On the financial side, we saw a few financial companies doing better than most, being better than even some of the larger companies in terms of results, right?
Like which ones? Like who?
Well, we saw some recovery of those that were not doing too well. We saw Barita's results were just published recently. They were much better than previous corresponding period, and perhaps compared to several other financial entities out there. We saw, even though stock prices are declined for several of them, we saw improved balance sheets, right? We saw cash flow improving for some of them. So there's still good opportunities. And if the investing public again take recommendation and think long term, there's great opportunity there. So just incrementally buy, nonetheless, as prices ebb and flow. They're still on the lower end when compared to 3, 5 pre-COVID prices. So there's still tremendous amount of opportunity. But with the macro as it is and the improving macro side, with the companies strengthening their balance sheet, I think there's tremendous opportunity in the medium to long term for the equity investor.